Okay, well, equities, of course, under pressure. Now 130 points lower. Started with about not started, but I mean, we were down about 60, 70 points, half hour back. It's now double that in terms of losses. And we are under the 20-day moving average as of yesterday's, the 20-day as of yesterday's close, we are under that level. Manisha is here with what's moving in commodities. Manisha, over to you.
Well, thank you for that, Prashant. I'm looking at rubber prices because a major price movement overnight has come in for this one. We've seen a decline of 4% overnight. And when you look at this year, it's down by 13%. And this is even as we're looking at a deficit in the global markets. Let me take you through numbers there. We did see a 7-month highs in this year itself, but since then the prices have been on a decline there. When you look at the, global rubber market there, and as you can see, the last 4 years, we haven't seen the production in the global markets gain any much. So from 14 to 15 million tons of production is what we haven't been able to achieve. But then you look at the consumption numbers, and they clearly have been rising every single year. 2025, by the way, is the 5th year of deficit when it comes to rubber production and consumption numbers therein. So that, in turn, should have been supportive for the prices. But that's exactly what we have not seen. Also, when you look at the natural and the synthetic rubber market, well, when you look at that categorization, the synthetic rubber market is higher than the natural rubber market. One, because there's not such availability. And second, because synthetic rubber is more affordable. So when you look at the market dynamics, 52% of market in rubber is synthetic and 48% is natural at right now. Talk about the Indian markets then, and here as well, it's quite a dismal way when you look at the price movements itself. The input costs, remember, have been rising, but it is a cheaper import of rubber that we continue to see within the country. So this is the prices. All-time highs, what we saw in 2011 at 243 rupees a kg. That was broken last year in August 2024 when the rubber prices hit a high of 247 rupees a kg. Fast forward it to today, and you have the rubber prices trading lower than what they were in 2011 at around 185 rupees a kg. As I said, 40% of India's rubber requirements are imported, and this is cheap rubber coming into the markets there. And another thing that the industry has been asking for is an import duty, anywhere to the tune of 5 to 25%, because the way the rubber prices have been in the last many years, they actually have seen a decline of 25% in the last 10 years. So not a great time to be a rubber producer, clearly.
Okay, all right. Thank you very much, Manisha, for the dynamics of the rubber industry and what's happening with the rubber markets right now.